The most common question a demand zone ever gets asked is not asked politely. It arrives as one violent bar, a long wick spearing through the zone, printing a new low beneath it. Is the zone dead? Here the answer was no, and the difference was one checkable detail: the close. The zone survived the flush, collected higher lows, and the launch that followed broke the supply ceiling overhead. Two zones, one rule, opposite verdicts. The chart opens in an established decline. Lower, highs stacking down the left side, each rally stalling beneath the last. Sellers own the auction. Reads like this matter because the eventual reversal has to happen somewhere inside a picture that looks like it never will. The discipline is in not guessing where. The chart will mark its own candidates and then attack them. Midway through the frame, price stages its most serious rally of the decline, and it fails. The swing high prints as another lower high, and at the failure point the supply order block is marked, the pink band extending rightward, the ceiling for everything beneath it. Hold on to this zone. It will cap every rally in the range that follows, until the final phase, when its own verdict comes due. Rejection from a supply region resolves downward, but the decline's character changes. Bars shorten, follow-through weakens, price stops making progress and starts overlapping. A market where selling is still present, but no longer unopposed. A base carves out beneath the supply band, and a higher low prints, the first in a long time. The auction beneath this level is changing hands. Out of that base, price produces an impulsive push higher, and at its origin the demand order block is marked, the green band. The frame is complete, supply above, demand below, price rotating between them. The demand band claims only this. The move up started here. The last sellers were absorbed here. Whether it holds is decided by what happens when it is attacked. And the attack is already loading. It comes as one bar. Price accelerates into the demand zone and keeps going, a long lower wick spearing clean through the band, printing a lower low beneath it. Not a drift, a purge. Every stop under the zone run through in one rotation. And the volume pain deserves a hard look. The flush bar selling volume is among the largest prints in the recent stretch. Real size traded at those lower prices. Watch the market's verdict on that trade. The flush bar does not close beneath the zone. Price is dragged back inside before the bar completes, and the bars that follow build inside and then above it. A close beneath demand is acceptance, the true signature of failure. A wick that closes back inside is the opposite. Those prices were visited, found only stops, and were rejected within the same bar. The band simply remains, its star persisting beside its label, the on-screen record of a zone genuinely tested and held. What follows the flush is quieter and far more informative. Price does not rocket away from the defended zone, it builds. A higher low print on top of the band, meaning the first pullback after the sweep could not even reach the zone's lower half before buyers stepped in. The market that just demonstrated there was nothing for sale beneath the level is now demonstrating a queue forming above it. The zone is examined again. Another rotation carries price back down onto the band, a genuine test, and the result is the same. The level absorbs it. Another higher low prints above the floor. Repetition converts an observation into a characterization. Beneath this band, for this stretch of history, sell-side initiative dies, and the supply band overhead is capping the rallies, all this while exactly as its own hypothesis proposed. Then the ceiling starts to crack. A higher high prints above the recent range, and the swing labels now read higher low and a higher high for for the first time in the frame. The sequence of lower highs that opened the chart is finished, and it ended on top of a zone that survived the worst single bar thrown at it. However you define the pivots, the picture agrees with itself. The trend that opened this chart is over. The ending is vertical. Price steps off the defended band one final time and leaves consecutive wide-range bars with buying volume swelling underneath. Notice what stands in the path: the supply order block that capped this entire range. The advance does not negotiate. It closes through the supply zone aggressively beyond the top of the frame without a pause. The flushed low never trades again in this history. 3 things to carry from this chart. First, a wick through a zone is a question and the close is the answer. The demand zone was speared and survived because the close never accepted below it. The supply zone above was broken because the closes accepted beyond it. Same rule, opposite verdicts. Second, survival is information and deserves to be recorded. A simple close-through rule would also have kept this zone alive, but the star is the persistent record that it was genuinely tested and held. And third, the heavier the flush, the more informative its failure. Real size traded beneath the level, and the market left immediately. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.